please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning.
Well, good morning. Welcome to Morning Call. I'm Lata and with me Anuj and Sonia. Let me just move away from this theme that, we will come back to practically every minute through the trading day. The way the US markets have shaped up, it's a massive rally. It has wiped out all the losses of 2018. It comes back on proven growth. The US markets have interpreted the CPI, inflation numbers, to mean there is growth. Why are prices being pushed up? Because the economy is able to pass on. Producers are able to pass on prices. There is so much demand. That's the interpretation the markets have placed. CPI finally has hit 0.5% month on month, and that's 2.1% annualized. Remember, the Fed's neutral rate is 2%. And until now, they said we are raising rates because we expect inflation to catch up. Inflation finally has caught up. But instead of getting worried about it, the markets have gone ahead and created new highs. That's the important point that we have to take home. The unfortunate part is we don't have Asian markets to tell us how emerging markets would have reacted, because it's lunar holiday time in the Chinese markets, that's both Shanghai and Hong Kong, as well as Korea and Taiwan. So we get only a muted picture. The developed markets, Nikkei and Australia, have reacted positively to the US growth story, or the developed market growth story. Now, the question we have to ask not just is how Asia would have reacted to the 10-year yields in the US touching 2.9, but how India will react to the domestic fraud. Is the global cheer enough to kind of mute the impact of the local fraud?
Yes, that's the big question, right? We saw it on the Bank Nifty yesterday, such a huge slide, almost 400 points gone. This morning, of course, the FI, DI numbers are a sell figure. So we got almost 800 crores of selling by FIIs, 150 crores of selling by DIIs. So let's see how today shapes up. Anuj, morning. Do you get a sense that the fall that we saw yesterday is just perhaps a tip of the iceberg, especially in the banking space? I'm not talking about the market on the whole, but for the banks, for the PSU banks, could there be more because of that big fraud that was unearthed?
Morning, Sonia. I don't claim to be an expert on that, so I won't even venture out into that territory. I'll just tell you one thing. Yesterday, Hang Seng was up 600 points, or nearly there, that much, and Indian market ended down. So there's no one-to-one correlation. That one-to-one correlation has been broken, and SGX Nifty right now is up about 80 points. This could well be on a day when you don't have Asian market cues, a bit of a fodder for the bears. It could be. That could play out. So, you don't want to take aggressive call in the first 5 or 10 minutes. You want to see how the market moves. The bigger question for me globally is the reversal of the short volatility trade over. You had the short volatility trade that got reversed. Is that reversal now over? Because if you look at the CBOE VIX, from the peak of 50, when you had that XIV instrument issue, it's now down to 19. Where was it at the peak of the bull market? 10 to 12. Still higher from that, but way off the 50 mark. India VIX from recent high of 24 down to 17. Where was India VIX at the peak of the rally? 10 to 12. So let's see. Sometimes, these counter trend moves make you look like it's the real thing, and then you have a 20 DMA halt, or, the market having a halt. And corrections normally don't end at just one go, and, then markets move on. You need a bit of a base formation. Template of 2017 may not necessarily repeat in 2018. Today, the big point to watch would be the Bank Nifty, because today is also the weekly options expiry on the Bank Nifty. And in that, yesterday, because in late trade HDFC Bank also fell, that could be the one which could lead the market a bit higher, or at least the Bank Nifty higher in the opening trade, purely on account of short covering. So let's see how long the short covering bounce lasts today. The key would be to see if the first hour high is taken out or not, because whatever happens, the gap up, you are not going to take out yesterday's high in the first hour. Yesterday's high was 10,590 on the Nifty and 25,810 on the Bank Nifty. As long as that is not taken out, those who would have taken shorts yesterday at the high point, they are not worried. So in that case, there's a good chance that
the shorts have the advantage.
Shorts have the advantage, and at high point, you would want to try a short trade once again. If it does not work, if the first hour high is taken out in the second hour, in that case, obviously, that trade did not work and the market would move on. But there's a good chance that some of the adventurous traders would try a short trade for today to see how things move. Having said all of that, mid-caps have stayed resilient. Even yesterday, the mid-cap index was in the green. Advanced decline was about 1:1. So, forget about the index. You should still be buying good quality stocks on dips, because that's where you're making a lot of money. But on the index, I would want to see the market's message. Just because Dow is up 300 points, I think it's too early to take a call that everything is over. Just want to see the first hour. The market will give you a message, of what kind of day we would have. By the way, we should not show Hang Seng trades in the stack, because that's of course yesterday's data.
Yeah, Japan is the only one that's open today. Most of them are shut for Lunar New Year. But let's talk about the banks, because yesterday we saw a lot of delivery-based selling, especially in names like SBI, where there was almost 700 crores of delivery-based selling. There was selling in ICICI Bank, Yes Bank as well. But Lata, because of the news flow on PNB, what kind of an impact do you see on the banks?
Well, I don't know whether we must really worry so much about only the banks, because there could be a market impact and an economy impact. Yeah. How much could the risk aversion be? See, PNB's letter has been written to 30 banks, and obviously there are more than just PSU banks over there. There is ICICI, Axis and IndusInd, as well as Standard Chartered. So there are foreign banks, private banks and PSU banks involved. Therefore, the markets may want to wait to see the full contours of the heist. If this modus operandi has been used, has it been, yet to be discovered, areas and amounts? So there will be that bit of a worry on all banks to check out. As well, PNB is saying, I'm not paying. I mean, you guys should have done, and the letter says that, all shipment credit is only for 90 days and you have given 1 year credit to this guy. Didn't it raise any heckles in your part of the risk management system? So we don't know how this can end and whether any other bank will face losses, whether this will go into, legal suits and arbitration. It's a little unclear. As well, definitely banks now will go into a thorough checking of everything. And so there can be a risk aversion because of that. You don't want to lend till, you've put your systems in place, especially to the diamond jewelry sector. So chances are, therefore, the banks as well as the jewelry sector. The third question, for which I don't know the answer, is whether the Gitanjali promoters even lent money in the market to play the stocks. So if that has happened, then there could be repercussions. Yes. But I really don't know the answer to that question.
Oh, yes. And, just to extend that point, Sonia, yesterday was not about just taking some shots in PSU banks. As you pointed out, the selling was delivery based in a lot of these big names. And the issue here right now is that, do you want to mess around in these stocks, or do you want to just stick to your cleaner, the retail facing private banks? That was the big trade which played out earlier, of course. But
that will make it only HDFC Bank,
that's what I'm saying.
Kotak Bank.
So the issue here is, HDFC Bank has, of course, 33% weight in the Bank Nifty. The only bank that counts as far as the Bank Nifty is concerned is State Bank, with about 12% weight. It's a big, all over the place right now, if you're looking at the Bank Nifty. So perhaps maybe Nifty is a cleaner play than the Bank Nifty. But more may come out in some of these
actually, yesterday even the mid caps fell. No? At one point in time, they were 2% higher, almost 1.7, and then ended flat. So to some extent, they gave up steam in the last.
Yes, but on a day where the Bank Nifty was on 360 and the Nifty was down, at the lowest point, it's only the adjustment which brought it to 10,500. On any other day, the mid-cap index could have easily fallen 400 points, and the advanced decline could easily have been 1:4. That was not the case. Yes, from the high point, from high point, everything fell, because you don't want to take an overnight risk.
Okay, let's get to Ajay Srivastava, the CEO of Dimensions Corporate Advisors, who has joined us now. Good morning, Ajay. Thank you very much for this unscheduled and early stop. But really, the first question is what we were asking each other. Can there be a stock market impact? Have you heard of any loans given by the Gitanjali promoter families, and therefore some kind of roiling in the stock market as well, aside from the hit of public sector banks?
No, I don't think, Lata, we heard anything which relates to that this money got siphoned into the stock market. As of at least yesterday, there was no such news that there were market operators working out of these funds. But it will be very difficult to, even if it was so, for it to come out so quickly in the market, because we're still not very clear where the money trail went and did it go overseas. Did it get into participatory notes rather than India? Because most likely this money ended up overseas, which means that it could have routed out into PN notes rather than coming into India. So our guess is that even if the problem comes, it will come from the overseas leg of the market than from the domestic operators.
Ajay, good morning.
Good morning.
The positive view that a lot of people have taken is that, while the 10,000 crore number looks large, the bank has a balance sheet to cope up with that. And secondly, at the end of the day, PSU banks don't have that kind of market cap to sort of impact the market overall. Your thoughts on that?
It's not about the market. See, when a very large part of your financial system gets under a serious strain of credibility and legality, then you have a problem in the economy. It's not about, the stock market price. It's about people borrowing money day to day from the banking system, from the PSU bank. At the end of the day, for the MSMEs, this is the lifeline. And if this starts to shut down or clamp down, and let's be honest about it, this is not about some junior employee doing some little computer entry in middle of Bombay. This is systematic. We know about it. This is systematically followed by all PSU banks, very accommodated transactions. So it's not about the stock market. I think it's about the whole MSME sector, which accesses credit from this whole PSU banking system. They will be put under the cosh because every draw now onwards will be put under a severe scrutiny. Nobody wants to sign up on renewal of loans. Documents will get held up for 3 days, 5 days, 10 days. Export financing will come under serious impact. So unless the government moves in to quarantine this problem and ensure the credit delivery to export industry remains, this will cause a stress on the export side in a very severe manner, because every LC will be looked into now, every commercial invoice will be looked into, and that can take hell of a lot of time before the money flows to the system. So my worries are less about the stock market. My worries are more about the whole export sector, which will be put under a scrutiny thanks to these transactions.
So do you see the PSU bank trade completely over now, Ajay? And will this, this huge fraud have a domino effect on other banks as well?
Of course it will have, because of two reasons, Sonia. One is they're all in this together. It's not this one bank which was playing hooky with the law. All the banks, PSU banks, play hooky with the law. That's one. The number two, the point is that it exposes one major thing, is what's our central bank doing? Where was it all the years for inspection? DBOD does inspection every year. What were they doing? What were they thinking on the risk management side? So, I believe this is one of the, sometimes the last straw on the camel back is some of this fraud like this. And it would even be wise, and somebody said his net worth is enough to handle this loss. I don't think so net worth is enough to handle the loss. At 30,000 crores, NPA of almost 14% gross NPAs, he has only one asset to sell, PNB Housing Finance, which is market cap is 20,000 crores. They have a 30% stake. At best, they can get 7,000 crores out of this. So, so they are really on a lifeline at this point of time. So it's not as cushy as they are. So I think as bank nifty PSU trade is concerned, it was never there. It was always a trade, arbitrage case. It was always a speculator's delight. I don't think anybody believed that PSU banks were an investment case at all. And I think it's a good thing what's happened, because this will spell one of the reasons why these banks should be either merged, sold, or done away with, because I don't think RBI or the government can control this. Today this has happened, tomorrow something else will happen.
Yeah, this certainly opens those fears for sure, Ajay. But what is the immediate impact on the stock markets generally? Yesterday we saw the mid-caps in flat terrain. I mean, they were actually ending in the green, while the big indices and the bank nifty took a huge plunge. Today we have at long last an over 2% inflation in the US, and those markets are celebrating it. We don't have any index from the Asian markets because they're closed.
Yeah.
Tell us what can happen today.
See, let's not read too much into the mid-cap rally, because a whole amount of market operators are busy averaging their numbers at this point of time. This market in Bombay at least is sitting on huge amount of losses on mid-caps. Lots of people are averaging out the prices. They have bought at very high prices. They're getting lower. They're trying to average out. So great average out process is going on at this point of time. So you will see bouts of buying, bouts of selling happening. But end of the day, I think you'll feel lightening of exposures to mid-cap happening. Now, specifically, this event will trigger one big thing. Export-oriented industries will take a hit. If you're an investor in export-oriented companies, I think go easy, because their lifeline of funding is under doubt at this point of time.
All right. Ajay, thanks a lot for your time today early in the morning. That's the view from Ajay Srivastav. Let's do one thing. Let's go across to Mangalam then for the world view. Of course, today we have limited cues.
That's right, but whatever cues that we have are fairly upbeat. You know, the global screen fairly green on the Wall Street arena. The Dow at one point was actually down 150 points and ended about 250 points higher. So the US markets, they've been gaining for 4 days in a row, and by doing that, the Dow has also erased the losses that it made for 2018 and is now back in the black. What did lead to the gains were all the financials. So we had the likes of Goldman Sachs, Bank of America, Citi, etc. All of them were gaining. The Nasdaq too saw some gains come by from the likes of Facebook, Alphabet, as well as Amazon. The ones which led the rally earlier then did fall and are re-leading that rally. We got some macro data come by. The US inflation, that one rose in January by about 0.5%. That was a tad bit higher than the expectations of about 0.3%. As a result of which, we saw a spike in the yields yet again. Now they're at a 4-year high. They've crossed that 2.9% mark as well. In European markets, all of them were fairly in the green. All the three frontline indices, including the peripheral indices. We had the Italian index as well as the Swiss index, both of them outperforming the frontline indices. In emerging market space, the Brazilian index, that one should come up for you, trading with a gain of almost 3% in yesterday's session. The Russian markets too ended up 1.5% higher. The limited cues that we're getting from the Asian markets, the Nikkei is up in the green. The SGX Nifty, though, a tad bit of an underperformer there with a mild green tick at the open.
Okay, thanks a lot for that, Mangalam. Yes, we don't have the Asian markets, at least the large ones, to guide us, but we have an expert joining us to guide us. We have Richard Harris of Port Shelter Investment Management joining us on the phone line. Richard, good morning. Thank you very much. You working despite some of the major Asian markets not working. Tell us, how would they have traded? After all, we saw Wall Street actually celebrate 10-year yields going to 2.92. Would Asian markets also take it as an indication of growth and rise?
Well, this is the race at the moment, isn't it? We're looking at a race between interest rates going up and people fearing that's going to hinder growth, and the reality of the situation, which is that growth is continuing really quite strongly. So we're really caught in the two. It does look as if growth is continuing fairly strongly. You know, figures coming out of the US are positive. Europe is catching up. Emerging markets look as if they're doing quite well coming through, like China. All of this is quite positive generally for equity markets. But of course, at this stage of the bull market, you do get volatility because the market is still spooked about rising interest rates and the impact that might have on economies.
So do you expect to see more volatility? Because rising inflation has definitely sent jitters down Wall Street's spine. We saw a huge amount of volatility last week. Do you get a sense that there could be more on the cards? And how do you approach emerging markets like India then?
Well, we have had a period of very stable volatility, you know, 6 or 9 months of extraordinarily low volatility. So the only way was up in that situation, and I think that that's likely to continue. One thing I think it's important to remember is that the authorities are going to find it very difficult putting interest rates up. You know, there is so much debt around. They are worried about spooking the markets and the economy. And, of course, governments are very indebted too, so it's tough to put rates up. So even if inflation goes up quite a lot, let's say we move from the current 3% levels to 5 to 7, it's going to be hard for the authorities really to control that. And there will be a period of time where real interest rates are really quite low. And low real interest rates are good for investment, of course. So I could see a period of low real interest rates continuing for a while, which would be positive for markets and also positive for emerging markets.
Okay, Richard, finally, would you buy India now? I don't know. There was a local fraud at a public sector bank, which probably is likely to spread to other banks in terms of, you know, who exactly has to pay up. It's about 100 billion rupees, and that's a large amount of money. What is the sense? Is that spooking you? Has it even reached your ears?
It hasn't, actually, but you know, these things occur in banks from time to time. Of course, if there was some kind of huge cyber fraud of amounts bigger than that, you know, then we might be concerned.
The cyber fraud, it looks like a more cheating by a couple of employees.
Fraud, yeah. What I'm thinking is that basically if you have a very large fraud, then you could easily see that that might impact the financial system. But, you know, we hope that the governance systems are strong enough that that wouldn't happen. Small frauds happen all the time. They occasionally impact markets, but that would really be very short term. But to answer your question, yes, I would be interested in India. My only concern would be it did very well last year, so perhaps it might be likely to do less well this year compared to, say, a market like China. Okay. But I think the bulls are still running there.
Okay. All right, Richard, thanks a lot for your time today.
We don't have any great cues from the Asian markets. Most of them are shut today except Japan, which is trading marginally in the green. But the US markets had a great run. So let's see how we shape up. Let's take a look at what our wise experts have to say as we head into trade this morning. Chris Wood of CLSA says the US stock market bulls should be concerned if the American economy turns out to be as strong as many of them think. He says there's no way equity valuations can handle the sort of monetary tightening that would result in. Chris also says greed and fear remains highly skeptical that growth and inflation are going to pick up in the manner hoped for. But he says it looks increasingly likely that financial markets are headed for a big inflation scare. Chris says they are reducing the overweight in India by a further 3%.
Okay. Well, you have to accept that even if the Fed doesn't hike rates, the new fear now is that no one wants to buy US bonds, which is why the yields are rising and bond prices are falling. So the markets may push up interest rates even if the Fed didn't. Therefore, that won't go away. But will the market treat it as a sign of growth or as a sign of scare to growth is what we have to see in the days to come. Or clearly, Chris Wood thinks that it will be a scare to growth, higher interest rates. Okay, now for signs on India, Mohan Shenoy of Kotak Mahindra Bank says higher than expected US CPI has increased the probability of Fed rate hikes to 4 this year, including March. He says this, coupled with the sudden spurt in oil prices, weakened the dollar and exerted upward pressure on US Treasury yields. In line with the global trend, he says the rupee is expected to strengthen against the dollar today with a trading range of 63.85 to 64.15. And in the bond market, he says that the 10-year bond is expected to be bearish on the back of higher crude prices. And the US Treasury yields, he expects the 10-year yield to trade in a range of 7.52 to 7.56. That's a sharp increase in yields.
Okay, that's about the macros, but what about the micros? There are so many stocks that came out with their earnings, lots to talk about in our top 10 list. So let's start off very quickly. Let's welcome my entire team on board. Anuj, what are you looking at today?
So actually, lots of stocks, Sonia. Let's start with the one which is the most secular play in market right now. Spoken about it a lot of times. Ashok Leyland practically making new highs every day. Even yesterday it made a new high. And I just want to show you a chart of how this stock has been. 2013 high was 24 rupees. 2014 high was 54 rupees. 2015 high was 92 rupees. 2016 high was 110 rupees. 2017 high was 129 rupees. 2018 high was yesterday. It's a stock which has made lifetime, which has made new, sort of incremental high year after year, and has made you money whether you bought it at 10 rupees or you bought it at 100 rupees. So phenomenal. The other stock is NCC, huge delivery buying after very strong results, and the stock is still 11% off its previous high. So I would want to see if it goes back there. And then two more stocks, which is the port stocks, Gujarat Pipavav and Adani Ports. Our sister channel yesterday reported that the government is mulling allowing foreign vessels in coastal waters. That is likely to lead to better port efficiency, because right now what happens is that the priority is given only to domestic ships. If this happens, then that's a big move. And port stocks have done well. Adani Ports, for example, Gujarat Pipavav, they have done well. So the market was hoping that something like this would come along. So that would be an interesting bit to watch out for today.
Okay, well, before we get to the other stocks, actually we have an important news. Z-Learn has acquired 44.5% in MT Educare through a preferential issue. Chaya Shastri, director of MT Educare, joins us on the phone line. Chaya, thank you very much for joining us. Can you take us through, other details of the deal? What is the share price, as well as, by when we could hear about open offer and other things?
Good morning, this is Chaya here.
Yes.
See, basically, let me just give a little background. We are looking at this deal to be a milestone deal in education sector, where the first time supplementary education and the formal education have come together to do something at a very strategic level. And hereafter, we are probably going to see a lot of consolidation happening in education sector. The beauty is that the promoter is actually still very much going to be hands-on, and we will be 44%. Our promoter will be to around 23.7%. But what we are basically seeing is that our Prime Minister's dream about education requires such kind of milestone things happening in our country.
Okay.
And
Chaya, 1 minute. You said that there will be more consolidation. Will it be a purchase of a listed stock?
I'm talking about this deal today. Okay. So, of course, as you know, and as the information is given to you, the open offer will be there. Okay. So, as you go and as things will unfold, I'm also speaking about other players probably joining along the way. And, you know, I'm talking about the sector being consolidated, basically.
So, Chaya, morning, 200 crores that you will receive via the preferential allotment, what do you plan to do with the funds? And will Zealand get any seats on the board, any kind of management control?
Yeah, Zealand will be having management control. Okay. They will, of course, very much be the co-promoter. And 200 crores is the plan that we have actually estimated is we have some existing debt. So we require some funds to make sure our technology initiatives take off the way we have planned. And in addition to that, we are also looking at some acquisition, not a very large acquisition, but something which will give a required push to the.
So just a two-part question. Sure. What is the existing debt on the books, and by when can we hear anything about the acquisition?
We have around 170 crores on the book, 179 to be precise. But I mean, we are not may not take a call on how much to be paid back, etc. We are planning all that currently.
You are issuing new shares to Zealand.
Yes.
They are not buying up from current anybody.
No.
Okay, so
we are issuing new shares.
Okay, so there will be an increase of 44% in the number of shares of.
Absolutely.
Okay, and what do you see as synergies? How might it impact your actual business?
We have a large network of schools, and you know, we are in the space of test beds. We see a lot of integration into our services, and of course and their expertise into training, their expertise into content development. Formal education is a space we always aspire to be in. So, in our opinion, this is absolutely a milestone in terms of both the institutions, which are sizable, and with an ethos of serving a different kind of target audience, coming together for a common purpose.
So with this technology initiative as well as acquisitions, etc., what kind of growth do you see in your revenues? You're currently sitting on a base of about 140 odd crores for 6 months of the fiscal. What kind of growth are we looking at?
I would say should add to at least around 15 to 20%, but I think we should wait and watch. I would like to work and probably contribute to our growth story, and then only make a statement about it. Yeah.
Actually, the stock market statement that MT Educare has given says that you all have 1.7 crore shares out of about 3.98 crore shares outstanding.
That's right.
And of that, 1.1 crore shares are pledged.
Yes.
So would you depledge it? Anything with? I mean, the promoter doesn't get the money; the company gets the money. But is there any way in which you will depledge this?
At the right time, and maybe at the right opportunity, because just now we have pledged it with the current lenders. That all depends on how do we look at the deputing the funds. So it would be a little early to comment about it.
Okay, so your the promoter shareholding goes down to what, 20%?
23.7%.
Okay. All right, we'll leave it at that, Chaya. Thank you for all the information that you provided. That's the word coming in from MT Educare. The funds they receive, about 200 crores, will be used, one, to retire some portion of their debt, which is 180 crores, two, to fund some acquisitions, and also for some technology initiatives. And they see this deal as bringing about 15 to 20% higher revenues on their books. Well, you can expect these stocks to be in focus today. But apart from that, PNB, that was the huge loser yesterday post that fraud. Lata, can we expect some more?
Clearly PNB will continue to be under pressure, but PNB has named 30 other banks and told them, sent them that cautionary letter. Now, the contents of the letter indicate that PNB is even fighting whether it should return the money at all. It is claiming, it's alleging that you guys didn't do your due diligence either. So now we don't know whether the entire loss will be PNB's or whether it is going to be distributed over 30 banks. In which case PNB need not fall so much. So, it is, while all banks are going to be under pressure, we don't know exactly, how much of the load PNB itself will take. Secondly, you must expect all the jewelry stocks to definitely feel the pain. Of course, you're going to see a big dip on, big cut, circuit down on Gitanjali Gems, but it will perhaps have an effect on other jewelry stocks because it's possible that banks will go into a bit of a risk aversion lending to them.
Okay, that's going to be interesting, of course, all the gems and jewelry companies as well. But Sun Pharma's numbers came post-market hours, and of course, the big triggers would still remain the halal inspection. But Ekta, how's the market likely to react today?
Well, Anuj, the street is actually split down the middle in terms of what exactly Sun Pharma could react to. Now, if you look at the numbers, the Q3 margins were largely in line with estimates. It came in at around 21.8%. The management had guided anywhere between 20 to 22%. But the US markets continue to be under pressure. So despite that 30% fall, despite taro numbers, the gross margins came off significantly on a Q-on-Q basis. The company is positive about the specialty pipeline going forward, so that would be an important trigger to watch out for. But at least in the near term, the two things which will determine the stock movement would be the revenue for Q4, because the management said that they could expect to miss the guidance that they had guided in terms of a high single-digit decline in terms of revenue marginally. Plus, we have the halal inspection, though the management did not confirm that it's going on at this point in time, but the street would probably be on tenterhooks on account of that.
Okay, Ekta, thanks a lot for that. We'll keep an eye out on Sun Pharma. But Jet Airways had a weak showing this time, Sonal.
Yes, absolutely, Sonia. The weak show continues. Though the revenue went up by 10%, but the EBITDA was flat, and the EBITDA margins, that is EBITDA before lease rentals, that also was flat at around 963 crores. All this led to EBITDA margins. They came down by 170 basis points at 15.8%. But profits, that is where the major decline was. That came in down by 46% at 165 crores. What was the reason for this fall? This was because of the fuel costs. They were up around 29%. Even the other income that went down by around 39%, leading to all this fall. But there was one positive thing in the whole result, is that the international revenues went up. Remember, they had some demand crunch in the Saudi Arabian region, but this time around international revenues went up by 8%. But today I expect the stock to be in red.
Okay, Sonal, thanks a lot for that, and keep in mind the stock has rallied a lot, so obviously these numbers will not go down well. But Nimish, QIP an idea?
Oh yes, and so the stock will be under pressure. The idea is looking to raise between $400 million to $550 million by QIP issue. The book was launched last evening. The issue price is at around 82.5, which is like a marginal discount to yesterday's closing price. But it's a close to 8 to 10% dilution on a pre-issue basis for idea. So that's the reason why the stock will be under pressure. And in which ways the stock has been under pressure, the entire telecoms pack. But given that there is a dilution with a bit of a discount, the stock will be under pressure into this for sure.
Fair point. From one telecom company to another, Ronit, Bharti Airtel's Africa holding company to do an IPO?
Yeah, this came out during the dying hours of the market, and it's come a full circle. Bharti Airtel's Africa business was once upon a time a pain point, and now it's become the shining star of their business. So they're planning to list the African business on an international exchange. Remember, the African business contributes around 25% of the consolidated revenue, but almost 50% of the consolidated EBITDA. Even in Q3 FY18, Bharti Africa is what saved the consolidated numbers. And if you see, Bharti Africa operates in around 14 African countries, and they're number 1 or number 2 in every country they operate. So the funds of the IPO can be used for the Indian operations. So on the back of this, you can expect a green on the stock today.
Okay, Ronit, thanks a lot for that. Yeah, that's been some comeback for the Bharti Airtel Africa operations. Comeback of the year has been Maggi, of course, and it's showing in the numbers now, Mangalam.
That's right, Anuj. So comeback for the last 1.5 years for Nestle and Maggi. So Nestle numbers yesterday looked very good. A total income growth of 15%. We were working with a number of 12.5%. So that's a positive. EBITDA grew at 38%, 38.7%. And we were working with a growth of about 36%. So that again is a positive. Margins were led by higher gross margins as well as lower other expenses. So some belt tightening seen there. The net profit at 312 crores, a tad bit below our estimates. That was primarily because the company took a one-time provision for contingency. What was the biggest positive? Indian revenue growth. That one came in at 18.1%. So that is a positive. And CY17, the company follows a calendar year. That has been historic. The company's crossed 10,000 crores on the top line for the first time. So expect a green tick on Nestle.
Nilam, you don't get 2 minutes at all for Z-Learn. We already spoke to the management. But in 20 seconds, just tell us the price levels for the open offer.
So the price level for the open offer is 72.5, which compares to about 69.8, which is where MT Educare closed yesterday. So that 5% premium should adjust today. But remember, the preferential issue was made at 62.5, which is again a 7 rupee discount to the current market price.
Okay. So we'll watch out for 72.
Yes, let's move on quickly. Abhishek is with us. He'll tell us how Repco Home Finance did today. Abhishek?
Well, Sonia, ICRA's prediction of, self-employed gross NPA rising in the LAP portfolio is coming true for Repco Home Finance. Their asset quality deteriorated with gross NPA at 3.7 versus 3.4. Now, what led to the deterioration in asset quality was the self-employed category and the loan against property book. So, gross NPA in LAP, that is loan against property, rose by 70 basis points, while in the self-employed, it rose by 50 basis points. Disbursement declined sequentially, while loan growth remained subdued on a sequential basis. Overall, their earnings also came below our polls. So expect a red tick on the stock today.
Thanks a lot. We have to run through this very quickly. It's already 8:35. Naveen, Infibeam.
So both Infibeam and TV18 broadcast will be in focus. Infibeam will be issuing convertible warrants worth 40 crores at 186 rupees, which is almost 18% above the current market price of Infibeam. Infibeam will also be in focus because of its Q3 numbers, strong numbers, EBIT margin up at around 16% versus 12.8%. PAT is also up 39%. Expect Infibeam to be in the green today. Back to you.
And finally, Sonal, some of the other
disclosure.
Results.
Okay.
Yes, we flashed the disclosure on the screen. Sonal, some of the other results?
Well, I'll start with Welspun Enterprises. Strong set of numbers. The revenue went up by 454%. All this leading to profit increase of around 356%. The order book currently stands at around 4,100 crores. Expect that stock to be in green today. Crore and Wheel, another strong set of numbers. The revenue went up by 14%. The margins went up by 160 basis points, and the profits were also up around 54%. Indocount, weak set of numbers. Lower margins dent the profits as well. The revenue went down by 9%, and the profits were also down by 9%. So expect that stock to be in red today.
Okay, thank you very much, all of you, for putting all those stocks on the table. We'll run the key stocks on the flashes. Those are the green stocks, and the red stocks as well will come up for you.